How's it going, everyone? It's Sam. I made a mistake recently, and it's not selling something soon enough, and I want to talk you through it. It's something that I've talked about a lot on the channel, and it's actually two different things that I sold here today. I'm reinvesting the money into other assets, and I'll, again, explain that and why that is. Now, these assets were not the majority of my portfolios in this kind of asset. It accounted for a smaller percentage than most people would think. But again, these are assets I've talked about in the past, and they were worth a significant amount of money to most people and still were a couple percentage of my asset portfolio, again, in this certain type of asset. This is going to be beneficial to everyone, not just the people that were in these couple assets or in the ones I'm buying, but also it is a good thing to remember as you invest that selling is difficult. It's hard enough to trim a position, but it's even harder yet to sell it completely because it basically is saying that what you thought was incorrect. Even though we're basing everything on probabilities, if there's a 1% chance that you're going to make a 1,000x, that's probably worth taking with some percentage of your portfolio, just to be extreme. But when you eventually sell, it still means that you were wrong, and it's hard to remember that there was a possibility that could go really smoothly and that you could make a lot of money on your investment. But as time goes on, you do get more information and you have to readjust those probabilities, which is what I did here today. I don't think what I bought was worth holding on to anymore because of the risk that these different assets have. So if you don't mind hitting the like button and subscribe button, I appreciate that. I'm just trying to be as open and honest as possible on the channel. I did tell this to my Patreon members ahead of time, so in case you want to join the Patreon, link to that is underneath the video. And there is a link down there to BlockFi where you can get up to a $1,000 bonus for signing up and starting to deposit on their platform. Again, check that out in the description below. Now, over the last 6 months, over the last year, I want to set the stage. I have been buying a lot of different assets. I've been buying a lot of these few different assets. One is Bitcoin. I've been adding about $500 twice a week to Bitcoin. And I probably shouldn't give you the numbers, but let me just say that's what I've been averaging, at least dollar cost averaging $1,000 a week. But I've also been doing some other bigger purchases as well as we fell down in price. And way more significant than the DCAs. Now, I've also been buying even more of these three different stocks. Tesla, as you can see here, Alphabet, and Amazon. I've also been adding to VOO, which is a Vanguard index fund. Now, why am I adding to these? Well, there are a variety of reasons. First of all, I just want to diversify away from crypto and real estate, which is where the majority of my money was in the beginning of the year. Second of all, you can see great growth from all three of these companies, right? Look at this revenue growth over time. You can see it here on Google as well. Pretty consistently growing 20, 30, 40, 50% a year, depending on which of these stocks you're looking at. Now, with that in mind as well, they have great profitability. They have deep moats that are very difficult for other companies to compete with them, and they're able to continue increasing their market share or getting into new markets. I see a great projected path forward of high profitability with these companies, and they're in good cash positions as well because they're already making a ton of money in most cases. Now, some of these companies are burning through a lot of cash, like Tesla setting up new gigafactories and ramping them up, like Amazon spending so much money on moonshot investments that some of the times they seem expensive, but when you take into account how fast they're growing, they're actually not too unbelievably expensive. Now, with that in mind, I've been buying, like I said, a lot of these different companies, but there are some companies that I've been holding on to, and towards the beginning of the year, I got rid of all my penny stocks. I got rid of most of my high-risk stocks, but I kept a few around. However, I sold some of them here today. One is going to be Matterport. Now, just to be clear, I still really like the technology from Matterport, but this pretty much embodies the 2020 and 2021 hype cycle. In that this is great technology. It had what I thought was a great idea, but they failed to execute, and they're failing to get people to sign up with them and to start spending money with them. they have very slow growth. You can see for a growth company, the trailing 12 months is 113 million. If we look over the quarterly here, they've been around 28 million for the last 4 quarters in a row. And even before that, they were around 24, 25. So it's not like they're growing that quickly. They also are burning through cash. They're not profitable. And it's not like any companies have really seemed to take a great interest in them. Like when they started working with Facebook, developing what I thought was going to be their new metaverse, I thought this was going to be a huge profit generator for them and they were going to get some massive contracts. With Facebook spending $10 billion a year, I thought they were really going to hire Matterport to do a majority of their mapping. However, that didn't ever really occur. They're still not getting a lot of revenue from them. So as they're burning through cash, they're going to either have to raise debt or they're going to have to sell more shares. And that's not going to be good for us as shareholders. They're going to have to just dilute us over and over just so that they can stay in business. Now, I also sold Tattooed Chef. Now, this is a stock that I was really excited about. I think that plant-based foods have definitely a spot in our future here on Earth, just as a way for people to eat healthier alternatives. But they are in a similar situation where they're burning through cash, and they didn't really grow that much. Of course, they're saying that it's due to a variety of reasons. They're ramping up. They also have a lot of issues because of supply chain. But the fact is, they're not making any money. They're burning through a lot of cash. They're down to under 30 million. They had to get a new credit facility, and this means that either they're going to have to start using that credit facility or dilute shareholders within the next quarter at this point. I really thought they were going to be growing quicker than they are now. And of course, there is a possibility that this could be a great company. I know there are a lot of people that like Tattooed Chef, and I know that there are a lot of people that are invested in it. However, I still don't think the probability of investing in them for 20, 30% growth is worth that risk when you can invest in something like Tesla. And again, a lot of people don't like Tesla, but the fact is they're growing at 40 to 50% a year in terms of deliveries. And this is only one side of their business. Of course, they're going to be ramping up other sides of their business as time goes on. And I just think that this is going to be much more profitable, and there's much less of a likelihood that they go bankrupt than something like Tattooed Chef or Matterport. So while it stinks to have to sell at a loss, the fact is that we have new information that's come out over the last few days with Tattooed Chef with their latest earnings, and Matterport actually has their earnings tomorrow, so I fully understand these stocks could go up and create great returns for a variety of investors. And that's why I'm not telling you what to do. I'm just telling you what I'm doing, which is really difficult when I was wrong on something. But I still think that these different companies are going to be highly profitable: Amazon, Google, and Tesla. And I also already have some investments that I think are going to do really well that are much riskier, like Bitcoin and Ethereum and some of these other altcoins. I'm really not looking for a ton of risk in my stock portfolio, right? I'm okay with Google and Amazon and Tesla being boring and growing at 20 to 50% a year. I like that. I think that they're still going to give outsized returns, and there's very little chance that they go bankrupt. Now, with this all in mind, these were still a small portion of my portfolio, Tattooed Chef and Matterport. They were just 2 to 3% because I've been adding so much to Tesla and Alphabet and Amazon. They were so small, but I still have to reallocate, like I said. So I am taking equal portions of this money to put into Tesla, Alphabet, and Amazon, and that's what's going to happen. Again, I'm taking a risk by selling, but I'm also taking a risk by not selling. Now, let me know your thoughts on this underneath the video. Of course, you have to do your own research, but thank you so much for watching. I really do appreciate it. I realize very different from what I normally talk about. Pay attention to the CPI reading tomorrow, and I'll see you in the next video. Bye.